So the Fed held rates flat. We expected that. We talked about it. The Fed futures predicted nearly 100%, and that is what we ended up getting here at 4.25 to 4.5. This comes after 3 straight cuts since September of 2024. Again, this was the expectation. Everything was in line with what we expected. Usually, as rates start to come down, eventually you start to hit a turning point that becomes recessionary. A lot of people are talking about this here. Fed Powell even got asked about it during the session. Is this a 2008 crisis style move? Potentially, and he said absolutely not. We're not seeing any of the kind of conditions that led to that event. And I tend to agree with that. I think that's very, very fair. He said the labor market continues to be quite strong. The economy has continued to expand at a solid pace. So overall, bullish on the economy. Still no contact with Trump. Still continuing to see what potential outcomes we get from the tariffs or any kind of economic changes. They haven't made any incorporation of that because they said they don't know what that's going to do to the economy quite yet, and they're waiting for more data on that. And then the big piece here was that inflation was lower, but not at the target. They said it continues to be kind of sticky here, which was a change from the previous comments where they said inflation continues to downtrend. But as we headed into this one, it did level out a bit, which makes sense. That's why the Fed rate ended up leveling out for this one. And based on the probabilities, traders are not looking for another cut until June, July, and we've talked about that many times on the channel.